Hello, everyone. Hope everyone's doing well. My name is Stanley, and today I'm going to be sharing my thoughts on PayPal stock, ticker symbol PYPL. So, I'm just going to share my screen. I'm just going to give you some thoughts on why I think this company is a really undervalued opportunity. This is a blue chip stock that in 2020, 2021 was the absolute craze. They benefit a lot from the pandemic. But now I think it's just dropped below $60, and I think it presents a really valuable opportunity for investors. So let me go and share my screen for y'all. All right, PayPal. I think this company is really undervalued and underappreciated right now. I think there's a lot of opportunities with PayPal, and there's a lot of negative sentiments right now on PayPal. People are saying, oh, this company, it's a boomer company. It's never going to go anywhere. Its growth has slowed down. Nobody uses PayPal. Competition like Apple Pay and Stripe are just going to come in and absolutely destroy the margins. This company's not going to grow anymore. There's just so many negative sentiment. It kind of reminds me a little bit about how people felt about Meta when Meta was slowing down, their growth was stagnating, the user count wasn't growing much. Then people were saying, "Oh, they're wasting so much money on the metaverse." And then you see Meta went up 2-3x since that. And I think PayPal is a very similar opportunity. I don't think it's very understood. If you look at the stock chart for PayPal, you can see that sometime in about just 2018, 2017 or so, they're trading at about $80, $90. And then the pandemic came and everything shut down. People were making apocalyptic predictions, and that's the dip that you see in early 2020. Every stock was going down, retail stocks especially, but tech companies experienced a bit of a dip before people came to a realization that, listen, if nobody's able to shop online at these brick and mortar stores, hell yeah, these we got to shop online. And PayPal, being the company that facilitates these kind of online payments, they benefit a lot because everybody was like, oh, wow, we need to still shop, we need to eat, we need to buy stuff. And PayPal was like, perfect. Well, that's more business for us then. So in 2020, they shot up tremendously, about $300 per share, and people had a lot of really optimistic projections for PayPal. PayPal grew the record amount in the quarter ending in March 31st, 2021. They experienced like 30% or so earnings growth, 30 or so percent revenue growth. It was one of the hottest blue chip companies out there. And you can see in 2022 or so, or late 2021, the bubble popped. And this was for all tech companies. All tech companies during 2021 experienced a boom, a craze with all this crazy Fed money printing. The money went into these tech companies and then they did really well. And then at some point, the bubble popped, the growth started slowing down, people started getting more pessimistic, people stopped prioritizing revenue growth and were more like, can you become profitable? And then a lot of these companies experienced a slowdown and then boom. And PayPal is one of the companies that followed in that trend where they were doing really well in 2021 and then growth started slowing down. People started looking at PayPal differently, and now the sentiments are really bad. I just checked the stock market today, and it's trading at below that $60 point. The forward price to earnings ratio is around 12. So whenever a company trades at that kind of low valuation, it's pricing in a ton of pessimism. And PayPal, people don't really like this company anymore. And I'm going to show you a few reasons why maybe you might want to reconsider how you look at PayPal as a company. So let's just go into just how pessimistic people are about PayPal. So if you do a discounted price, discounted free cash flow analysis, you can put in that forward earnings, which is $4.95, and you price in a growth rate of 10% over the next 5 years. And let's just say in the 5 years after that, it slows down to 5%. And these are very conservative expectations for a tech company. Normally, tech companies, you expect them to grow at 15, 20%. Those tend to make them very well priced. But with PayPal, let's just put in these very conservative expectations. You benchmark a 9% rate of return for the stock market, and you can see the intrinsic value for PayPal is $161.45. So even penciling in some really conservative expectations, the stock is trading. There's more than a 2x if you put in these conservative expectations. Now, PayPal just this quarter is saying that their revenue is going to grow at about 10%, earnings is going to grow at 20%. So this is pricing in some level of stagnation, which is, let's just say, PayPal continues to do well, but maybe competition starts coming in, their growth rate starts to slow down gradually. Even pricing in that, it's still very undervalued, about $58 trading today. You look at their earnings now. If you price in a 5% rate of growth over the next 5 years and a 2.5% rate of growth, so this is really pricing in the fact that, let's just say, PayPal, something goes wrong, management doesn't execute properly, Apple Pay and Stripe start stealing a bunch of PayPal's customers, and we're pricing in conservative expectations of 5% growth annually and 2.5% thereafter. I mean, this is essentially what banks typically do. So it's slow growth for PayPal. If we assume that with a marking in a 9% rate of return for the stock market, we get $86.90. So even with these very conservative growth estimates for PayPal, it's still trading at 30 or 40% below $86.90. So that's how pessimistic people are right now about PayPal. So let's understand PayPal's business model a little bit more, and then I'll go into a few reasons why PayPal might have some more competitive advantages that people are not giving them credit for. So PayPal is a take rate business. They are a two-sided marketplace between consumers and merchants. So the most important metric to track for PayPal is the total payment volume, because they take a take rate from that. So you multiply active accounts by the transactions per account, multiply by transaction size, and get total payment volume, which is how much money is flowing through the PayPal network. And then you multiply that by a take rate of approximately 2%, and then you get PayPal's transaction volume. Or transaction revenue. So this is all the money that is flowing through PayPal, and multiplied by the take rate of 2%, and you get transaction volume, which makes up about 92% of all of the money that PayPal makes. And then next, underneath that, you have your value-added services. So these are, for example, interest on deposits, or the interest that they make from business loans, or services they provide to merchants, such as invoicing or inventory management. And you add those two together, and that gives you your total revenue. A lot of PayPal's costs are actually from maintaining their payment network. Being able to take into account currency conversion fees, the cost to host that payment gateway solution, and you add credit losses as well, which is how, let's just say, PayPal makes a loan to a business or to a consumer and doesn't go well. Well, PayPal is going to suffer as a result of that, and those are their volume-based costs. And then you add in typical tech company costs like customer support, sales and marketing, G&A, software development, and then you get PayPal's operating income. So this is PayPal's business model. Now, if you look at the services that PayPal offers, they make most of their money from two offerings. One is their core checkout business. So this is when you go online, you click the PayPal checkout button, and a wheel spins, and your checkout goes through, and your payment was facilitated through PayPal. So that's how they make most of their money, is from that checkout button that you use to make online payments for. And the margins on their core checkout is the highest of all of their other offerings. Next, you have PayPal's unbranded processing. This is through a service that they offer through Braintree, which actually facilitates the payments for a lot of big companies like Meta or Shopify or DoorDash. These are companies that are big, that have a lot of transaction volume, and this is the checkout where you don't actually see the checkout button for PayPal, but it's PayPal processing those payments. Now, those are the two main ways that PayPal right now is making money. And PayPal offers a bunch of other services as well that are not related to core checkout or unbranded processing, but are more services for consumers and for merchants. On the consumer side, a lot of these solutions are really, they're called digital wallet services, and they're more to get consumers to like PayPal, like using PayPal, and experience that brand loyalty to PayPal. So some of these include peer-to-peer transfer of money. So I want to send you money, I use PayPal, or sending money overseas, or receiving money overseas, or managing their charitable giving, managing credit and debit cards, so cryptocurrency. So these are all solutions for a digital wallet. And the idea is that PayPal is not really going to make that much money from these services, but the good thing is that when a consumer uses their digital wallet a lot, it increases the brand value of PayPal. So when these consumers then go online and they decide to make a purchase, and they see a PayPal checkout button, because they're already familiar with using PayPal, they feel that kind of affinity to being like, okay, look, I do all of my money checkouts with PayPal. I trust PayPal, so I'm more likely to make a purchase. So that's the core value add that PayPal checkout brings to a lot of these merchants. And the digital wallet services is to help create those loyal PayPal users. Next, we have the merchant services. Merchant services also increase the brand loyalty to PayPal. If you're using PayPal for your business loans, business credit cards, then it tends to make it so that you're more likely to know about PayPal, and you also use PayPal for your checkouts. But a lot of this is also to make merchants make it so that merchants are less likely to move from PayPal to a competitor solution. If there's a merchant that uses PayPal for their invoicing, inventory management, POS system, debit and credit cards, then they also use PayPal for checkout. They become stickier because they rely on PayPal for so many things. It's a hassle to then move from PayPal to using another payments provider. So this is the core offerings that PayPal has: making money from checkout, unbranded and branded, and then offering a bunch of solutions to consumers and merchants to keep them using PayPal, and also increasing the value proposition that they're offering to both sides. Other than that, they also have shopping tools and insights. PayPal owns Honey, so they have ways for consumers to manage their rewards, and also to help merchants drive consumer behavior by offering incentives to increase the chances that consumers will ultimately make a purchase. Now, these are the aspects of PayPal to consider. Now, PayPal isn't just one checkout. They own a bunch of different companies. In fact, they've mainly grown through acquisition. On the very left side, you can see PayPal Complete Payments. Now, this is the new offering, branded checkout that they're offering to their core users, primarily small businesses. And the idea is you give your consumers multiple different ways to pay. And this is the leading payment solution right now for PayPal users for the core checkout. A consumer goes on a site and they want to check out, and they have options that they can choose. So they can either check out through PayPal, they can use the buy now, pay later option, which allows them to make a big purchase and split it up into, let's just say, 4 different sections. They have pay with Venmo as well. This is something that PayPal has rolled out because they want to monetize Venmo better. So a lot of companies like Amazon even are accepting Venmo, and PayPal wants the ability to give them to use that as a way to make a purchase. And they also have Apple Pay as well. So they're integrating Apple Pay into their core PayPal option in order to give people more options to pay. Because the whole idea is if people don't have their preferred method of payment, they're much less likely to check out. While PayPal is integrating Apple Pay in there and providing that back-end infrastructure to accept payments so that even if somebody uses a PayPal competitor, they're still able to increase their market share in that manner. So core checkout, I think I've mentioned, is their highest margin business and the way that they make most of their earnings. Next, we have Braintree. Braintree is a competitor to Stripe and Adyen, and it's a very sophisticated software system that's more for larger enterprise users. So companies like Shopify, like Uber, these are companies that have a lot of transactions go through their company, and they need some sort of back end infrastructure solution that helps them to manage those payments. So that's Braintree. The payment volume for Braintree is growing a lot. Revenue is growing at 30%. So it's a very powerful asset for PayPal. However, the margins are lower because PayPal's offering to a small business is very high. Because if people don't know about that small business, but people recognize PayPal, they might be like, okay, well, PayPal is a legitimate solution. If I transact with PayPal, I can be sure that my money is protected. While with a big company like Uber or Mercado Libre or some of these larger companies, that value proposition isn't as strong. So the margins tend to be lower, but the payment volume is a lot higher through their Braintree offering. And PayPal is also working out a way so that if they sign up an enterprise client through Braintree, and the enterprise client has a bunch of smaller subsidiaries, they can then put that into their sales pipeline to sell them the PayPal checkout solution, which is more for small businesses. Now, PayPal has a lot of other offerings within the core PayPal company that have a lot of potential. One of these is iZettle, which is, think of it like the Square competitor. It gives POS solutions to brick and mortar stores and also allows consumers to check out using QR codes. They also have Venmo as well, which you may have heard of. It's a popular peer-to-peer transfer solution. So if you and your friends go out and you want to go buy some food, and let's just say your friend pays, but you owe your friend money, well, then you can Venmo your friend, let's just say $20 in order to cover the cost of the meal. It's used for if you go to concerts with your friends, and they've integrated a social media aspect to it as well. So there's about 90 million users of Venmo right now, although it's not very well monetized yet. And we also have other solutions as well. Honey, which I've mentioned, is that browser extension that automatically applies coupons. And PayPal leverages Honey in order to help businesses attract consumers to make more purchases through their solution. Paydi and GoPay are solutions for PayPal's expansion into Asia. So Paydi is a leading buy now, pay later solution that's used in Japan. And GoPay is PayPal's plan to expand cross-border payments in China. So they're the only company that owns a payment solution in China, and this enables them for when the Chinese economy maybe recovers a little bit and more people want to make cross-border transactions, PayPal can really grow grow that business, which is pretty high margin. And of course, we have PayPal wallet services. So they have services like Zoom for sending money overseas, managing your credit cards, debit cards, managing your rewards, donating. So this is the PayPal solution that keeps people within the ecosystem. All right. So these are some of the various services that PayPal offers. It's not just one checkout option, as some people think. And this is how the revenue breaks down. So as you can see, the core checkout for PayPal makes up about 39% of their total payment volume, but a lot more of their revenue. While Braintree makes up about 31% of total payment volume, it makes up a lot smaller chunk of the total revenue. eBay, well, PayPal was part of eBay until 2015. And then later on, eBay decided to spin out PayPal, and then they decided to go with Stripe in order to manage their payments. So gradually, PayPal has been weaning off their reliance on eBay for their revenue and earnings. Venmo, you can see this is significant. 18% total payment volume, only 5% of revenue. So they're still working out ways to monetize that properly. And you have iZettle as well, which of course is something that also has potential for growth if they can get to something similar to what Square has. So this is a rough idea of how PayPal makes money. Now, I'm going to go into some of PayPal's competitive advantages, and the first I want to go over is scale. And their scale is important in multiple ways. One is being able to offer more complete solutions to merchants. Now, merchants these days, they don't want to go to multiple software solutions. They don't want to have one payment solution for their online, one payment solution for their in person, because it creates that lack of integration where they're not able to get a complete overall view of their business. And PayPal is able to offer a very scalable, complete solution to their vendors. And this is one of their core offerings that they talked about in their investor presentation, which is if they sell to a business, they can offer multiple things. If it's an enterprise client, they can offer Braintree. And if they want to accept in-person payments and QR code payments, they can offer that through iZettle. If they want to have a way where the consumers want to, there's a more social aspect to the purchasing, well, they can offer Venmo or pay with Venmo, especially if the business has, like, let's just say, a younger audience. And they also offer buy now, pay later solutions. Let's just say the merchant has high ticket items, while PayPal provides them the option to then have the consumers make the payments through, let's just say, force individual payments spread out over time. So unlike other businesses where, let's just say, Apple Pay is more of a solution that's focused on digital wallets and in-person payments, they don't really have that back-end infrastructure to facilitate payments the way that PayPal does. They can only offer one or two things to a merchant. Or let's just say Stripe, which is a competitor to Braintree. They can offer the online portion but not the offline. Well, a company like Square might be able to offer the offline but not be as strong when it comes to online payments. So PayPal has that advantage. They have a bunch of different solutions that create an ecosystem for them. And if they're able to successfully leverage that in how they sell to businesses, businesses are more attracted to this because if they can get multiple things related to their payments from one vendor, it's easier to manage than having to manage multiple different vendors. Another advantage with scale is the ability to have a lot of these solutions be better just because they're owned by the same company. So, for example, let's just say a merchant uses, let's just say, Zettle to do their offline purchases. Now, if they use PayPal to facilitate their online payments, then that merchant has a view of both their offline payments as well as the data from their online payments, and it provides more data for them to see, okay, who's purchasing online, who's purchasing offline, how can we drive more increased consumer engagement. Another example is through PayPal's integration between Venmo and the digital wallet, where Venmo has, let's just say, 90 million users. The digital wallet has about 300 million users. If you make it easier for Venmo users to send to PayPal users and then PayPal users to send to Venmo users, it increases the value of both offerings. Same with their buy now, pay later solutions. If you have a company like Affirm that only offers buy now, pay later, it's not as powerful as PayPal offering, let's just say, core checkout and buy now, pay later, because the core checkout will then drive more people to use their buy now, pay later solution, which, if it goes well, increases the value of PayPal's brand and also their core checkout. So the fact that PayPal has all of these individual solutions and there's integration that they can do between each solution raises the overall value of all of their different solutions that they offer. Now, the last advantage I want to talk about for PayPal is AI, which is a huge buzzword these days. If a CEO says AI now, their stock price goes up 20%. But with AI, one of the things that I heard from their management call is Braintree. When you use Braintree for an enterprise client and it facilitates a lot of purchase volume, it increases the data set or the quality of the data set that PayPal can use to then improve their payment solutions. Because if you have a lot of payment transactions coming through, you have a better idea of who actually is making these payments, and then that increases your authorization rates and improves your loss rates. What that means is a merchant that, let's just say, uses a credit card or a debit card payment, because PayPal already has data on that user, the transaction is a lot more likely to go through than if they use another payment provider that doesn't have that rich data set that PayPal has. And because PayPal has all of these different solutions, gathering transaction data from multiple different areas, like Paydi's giving them Japanese payment transactions, GoPay the Chinese transactions, Zettle is the in-person, Braintree is the enterprise payments. They have so much data that they're able to have a better loss rate and authorization rate than a lot of their competitors. And for Braintree, that's a huge value differentiator. But even for other PayPal solutions like Core Checkout or Zettle or Venmo, it increases the ability for that payment to go through. And it's something that's difficult for a competitor to duplicate. Because PayPal's been along for 20 some years, they have those data sets that they can use to get data on users, to reduce fraud, and it's hard for another business to really duplicate that level of scale. Now, of course, we have network effects as well. So PayPal is right now the leader in the payment space, and that's something that you can't really disregard. They have about 400 or 30 or so million people using PayPal, about 30 or so million merchants, and that's a lot of people. So the more consumers using PayPal, the more their value proposition appeals to merchants because they want to accept PayPal, and vice versa. The more merchants on PayPal's platform, the more consumers want to go through PayPal in order to make purchases. And this flywheel effect is pretty significant because then you get brand recognition on both sides. You have consumers who are more likely to make a purchase if there's a PayPal checkout button, and you have a lot of people being aware of PayPal. So it means that for another company to want to come and disrupt PayPal's business, they're going to have to create a similar network effect that PayPal already has, which is harder than maintaining and expanding an existing one because there's already a strong value proposition for both merchants and consumers. Now, let's go into brand recognition here. So PayPal is a very well-known solution. You can see in Europe, it's very popular. Between August 2020 and August 2021, 93% of German consumers use PayPal at least once. And in UK and Italy, it's 91%, France 90%, Spain 89%. And it's hard for another business to come in and get that same level of brand recognition that PayPal has. And in Canada And in the US, it's about 85%, 83% of people use PayPal at least once throughout the year. And that's hard for another payment solution to get to at the exact same scale. PayPal right now is the fifth most popular payment method, only behind MasterCard, Visa, American Express, and Discover. So it's one of the most accepted payment solutions out there. If you look at other brand awareness, 95% of the people in the US heard of PayPal, 74% of people in the US say actually like PayPal. So PayPal is in that established position where it's easier for them to grow and scale because they already have that brand awareness in the minds of consumers. If you look at some more statistics here, PayPal throughout the 20 years has built a very trustworthy persona, a very trustworthy brand, which makes it so that when people want to go online and make a payment and they see PayPal, a lot of people, I mean, you laugh, but boomers know about PayPal, and boomers know that when they make a transaction through PayPal, that it's probably going to be safe. So this is pretty important. And if PayPal is able to continue to strengthen and increase the power of their brand, it's going to be hard for another payment solution to come in and have that same level of brand recognition that PayPal has. And the brand recognition is important because it's what drives people to make purchases online. If people trust a brand, people are more likely to make a purchase through it, and it's easier for them PayPal to then sell merchants on the value of payments through PayPal. All right, so that's basically it. During my next live stream, I'm going to be talking more about the impacts of the economy and how this has affected PayPal. So tune in until then. I'll talk to you all later. Bye.